Hi, it's Bud. If you have no money to fund your real estate deals, what do? Where do you turn? Running a successful real estate business requires capital, and without it, even the best opportunities are going to slip through your fingers. But here's the good news. You don't need to rely solely on your own savings or bank loans. I'm going to walk you through a proven method for securing private money so you can keep your business growing without missing a beat. In today's video, I'm going to deep dive into how to locate and execute private money lending. This is essential for anybody who wants to scale their real estate business. Private money lenders, or PMLs, are individuals who lend their own capital to fund your deals, and the best part is, you can set terms that work for both of you. This gives you flexibility and the ability to build wealth faster. So I'm going to break down what private money is, how to find PMLs, and why it's a game changer compared to traditional financing methods like hard money lenders, or HMLs, or bank loans. Stay to the end because you'll also learn how to execute a private money strategy that ensures your deals are funded quickly and efficiently. So get ready to dive in. We're going to get started. To kick things off, let's talk about what private money is and why it's key to your success in real estate investing. Private money refers to capital from individual investors, people that you already know, like friends or family members or business acquaintances. These are people looking for higher return on their investment than they would get from traditional savings accounts, the stock market, or retirement funds. In many cases, they're not actively investing in real estate themselves, but are eager to put money to work in this lucrative market. A PML can come from two markets. First is the warm market, which is people you already know, and the cold market, which includes people that you don't already have a personal relationship with, but are actively investing in real estate. They might be other investors looking to diversify, or people who have attended real estate events and are interested in your niche. One important thing to clarify is that private money is not the same as hard money, so let's make this distinction clear before we go any further. Hard money lenders act as brokers or middlemen who connect you with funds from institutional investors or individuals. Hard money lenders often impose higher interest rates, fees, and a lot more rigid terms. They profit by taking a fee on top of the usual closing costs, and they may require personal guarantees. Essentially, with hard money, the lender gets the security and you take all the risk. Private money, on the other hand, comes directly from an individual. You have the flexibility to set your own terms, interest rate, and repayment schedule. This means that private money can be far more cost-effective and faster than hard money. Why should you be using private money to fund your real estate deals? Well, here are the top reasons why private money is the game changer that it is. First, you make the rules. You're in control. With traditional bank loans, the bank is in charge. They dictate interest rates, loan terms, and even when and how you make payments. Banks will never tell you how much that you really pay over the lifetime of the loan. But with private money, you set your own terms. Terms that work for both you and your lender. You want a 30-year mortgage with a balloon payment at the end? Great, you can do that. You want interest-only payments for the first year? Great, that's possible too. Number two is creating a win-win situation. Private money isn't just beneficial for you, it's a great deal for the lender as well. They earn passive income through interest, secured by a hard asset, which is real estate. Plus, they don't have to worry about the day-to-day management of the property. You're doing all the work and they're collecting a check. It's win-win. Third is the flexibility. Unlike banks, which are rigid and slow, private lenders can move quickly. If you need to close a deal in 5 days, great. Talk to your PML. They can wire funds in 24 to 48 hours with no lengthy approval process without the mountains of paperwork. This speed and flexibility are why private money is the ideal choice when a seller requires all cash. Now that we understand why private money is so advantageous, let's take a look at the specific benefits compared to hard money loans. This is where private money really shines. Let's compare it side by side with hard money in 8 key areas. This will give you a clearer picture of why private money is often the better option. First is the percent of purchase price. Hard money lenders typically fund 80 to 95% of the purchase price, where private money lenders can fund up to sometimes 125% of the deal, covering your purchase price and all your renovation costs. This means you don't need to go into your own pocket for repairs, upgrades, or even closing. Next is interest rates. Hard money lenders usually charge around 12% or more interest, while private money lenders can significantly lower your rate to 8%. Imagine the difference this makes over the life of the loan. With a private money loan, your monthly interest payments are greatly lower, freeing up a lot more cash flow for other deals. Next is your origination fee. Hard money loans often come with origination fees, typically 2 points, sometimes more. Private money lenders, on the other hand, typically don't charge you any points. This can save you thousands of dollars on each deal, right up front. Number 4 are the terms. Hard money loans are short-term loans, usually 6 to 12 months. Private money, guys, can be anywhere. It can be 1 year and up to 30 years if you need it, or even shorter depending on the deal. This flexibility allows you to tailor the loan terms to match your investment strategy, whether it's a quick flip or a long-term rental. This is a big one. Extension fees. Stuff happens. So you need an extension on a hard money loan? Good luck. Get ready to pay sometimes up to 2% of the total loan amount. Private lenders, by contrast, don't often charge for the extensions if you build a good relationship with them. Here's a big one. In this industry, your credit score is going to take a hit periodically. Hard money lenders pull your credit and penalize you for lower scores with higher interest rates. They want to see income, your tax returns, your entire financial history. It's what I call a financial colonoscopy. Private lenders don't care about your credit score. They care about your experience and the relationships that you've built with them. This makes private money more accessible even to investors with a credit score as low as 600. Collateral and personal guarantee is number 7. So hard money lenders are going to typically require a personal guarantee even if you have substantial business credit. This can create havoc if you need to dissolve a company. Private money lenders may not require a personal guarantee at all, or if they do, it can be backed by the asset itself, plus an additional property if needed. I back up mine with rental properties. Number 8 is the speed of closing. If you've heard of the velocity of money, hard money lenders require an appraisal, tax returns, sometimes even a personal guarantee, meaning it can take weeks, sometimes even a month or more to close. While private lenders, if the numbers look good, you can have the funds wired and the deal closed in 24 to 48 hours. That speed can make or break a deal in a competitive market. So as you can see, private money offers significant advantages over hard money in virtually every category. But there's one more thing that I want to touch on, and that's how private money can help you get paid multiple times on a single deal. So let's talk about lesson number 3, my favorite reasons to use private money. One of the biggest advantages of using private money is that it allows you to get paid at multiple stages of the deal. I know it sounds crazy, but let me explain. First, you can take a check at the beginning. So when you close the deal with private money, you often receive more than just the amount required to purchase the property. You also get excess cash for the renovations and other closing costs. This means that you're paid even before the project starts. Number 2, pay yourself as a consultant. During the project, you can pay yourself or your company a consulting fee for the managing of the process. This is a legitimate way to compensate yourself as you oversee the renovations, manage contractors, and handle the project's day-to-day operations. It sometimes can be testy. Number 3, the check at the end. At the end of the deal, when you sell the property or you refinance it, you get paid again, just like everyone else involved in the deal. These multiple checks throughout the deal cycle make private money a powerful tool for building cash flow and wealth. The biggest mistake you can make, though, is not having a second exit strategy. Always make sure you have more than one way out of a deal. Whether it's selling the property, refinancing it, or renting it out, this protects both you and your private money lender. Lesson number 4 is, why do lenders want to work with us? Okay, so why are private money lenders eager to lend you their money? It comes down to a few simple reasons. First, private money lenders typically earn 6% or more on their loans, which is more than they would in a traditional savings account or a money market account. And because their loan is secured by real estate, the risk is relatively minimal. This makes private money lending a highly attractive option for those who are looking to grow their wealth safely. Next, it's safety and security for your lenders. The private loans are secured by a hard asset, which is real estate. If something goes wrong, the lender can foreclose on you and the property and recoup their investment. The sense of security is one of the main reasons private lenders are willing to do business with us. Another reason private lenders are drawn to real estate is the consistency. Unlike stocks, which can be volatile, real estate is a pretty stable and tangible asset. So private lenders can rely on regular payments and know exactly what to expect in terms of returns. Lastly, the trust factor. That's the biggest factor. Private lenders want to work with people they know and respect. That's why it's crucial to build relationships based on honesty, transparency, and performance. Once you've built trust with a lender, they'll be more likely to reinvest with you in future deals. So where do you find private money lenders? Well, the good news is they're all around you. Here are some of the best places to start your search. First, let's tap into your warm market. This is people you already know: friends, family, colleagues, and acquaintances. These are the easiest people to approach because you already have a relationship with them. Don't underestimate the potential here. There's over $18 trillion sitting in money market accounts, 401ks, and IRAs right now, and much of that is held by people that you already know. Another great place to find private lenders is through networking events, church groups, Rotary clubs, and even upscale bars or sporting events. Guilty. Start conversations, build relationships, and eventually talk to them about the opportunity that you're offering. But here's a crucial tip. Never sound desperate. What do I mean? Well, let's talk about how to approach the private lender. You don't start by saying, "Hey, I had this great deal and I need money." Instead, let's talk about your process, how you help private lenders earn higher returns in their investment capital, and how you're able to handle their needs effectively. Once you've piqued their interest, schedule a follow-up meeting where you can present a deal and secure a verbal commitment. Are you a veteran or first responder and you're ready to start your journey into financial freedom through real estate investing? Don't wait. Take action now and unlock your potential for success in real estate. Let's turn your dreams of financial freedom into reality. Head to budevans.com and schedule your strategy session now. Let's talk about the structure of your private money program, because once you've identified your potential private lenders, it's time to structure your money program. This involves explaining who you are, what your mission is, and how private lending works in context of your business. So let's walk through some key components of structuring your program. Who are you? Private lenders want to know who you are, what your track record is, and why they should trust you with their money. Be transparent about your vision, your mission, and your values. This helps build trust and sets the foundation for a successful partnership. 2, explain the why. Explain what private money lending is and why it's beneficial for them. Many potential lenders may not even be familiar with this type of investment, so it's your job to educate them on how private money lending works and why it's a low-risk, high-reward opportunity. You're then going to need to explain the specific terms of a loan, such as the length of the note, the interest rate, whether it's interest-only payments, whether there's a penalty for early payoff. Be sure to include details like the minimum amount required to invest and the security provided by the real estate asset. Finally, make it clear how and when they're going to be paid. Discuss the frequency of payments, monthly, quarterly, or annually, and how funds will be distributed. Be sure to emphasize that all money will be wired through the attorney or title company for added security. Let's talk about tapping into self-directed IRAs, because another powerful source of private money is self-directed IRAs, SDIRA. Many people don't realize that they can use their retirement funds to invest in real estate through an SDIRA. So here's how you can tap in to this underutilized resource. Establish a relationship with an SDIRA representative. Specialists can help guide you and your lenders through the process. Walk through the process with your lender. Introduce your private lender to the SDIRA representative and explain how the process works. Once the funds have been transferred into the SDIRA, it's a go time. But never make an offer on a property without securing the funds. Next, get funded and close the deal. So once your private lender's funds are transferred into the SDIRA account, work with your real estate attorney and your SDIRA rep to finalize the investment and close the deal. It's a smooth and secure way to fund your real estate projects using retirement capital. At the end of the day, raising capital through private money isn't just about making money. It's about building relationships, credibility, and trust. It's about creating a business that you can be proud of, one that allows you to spend more time with your family and friends and live life on your own terms. Remember, life is about more than just wealth. It's about relationships, giving back, and living life with integrity. Expect things to work out for the best, trust others until they give you a reason not to, and always bring good energy into the world. By doing so, you'll not only build a successful business, but you'll also build a life filled with meaning and purpose. Now, it's go time. The beginning of this journey can be scary, but the difference between those who succeed and those who don't is simple. They take action. Don't let fear paralyze you. Take the first step, build your private money strategy, and start turning your real estate dreams into reality. Raising private money is one of the most powerful skills you can master. And in this business, with the tools and techniques we've covered today, you're well on your way to building a successful and sustainable real estate business. Hey, thanks for watching. And until the next time, aim high. Thanks for watching. We hope you enjoyed it and learned something new today. If you did, please show us some love and smash that like button. Your support means everything to us and helps us reach more people like you who want to aim high in real estate. Don't forget to hit that subscribe button along with the notification bell icon so that you can stay up to date on all of our future content. If you're hungry for more real estate and finance related videos, we've got you covered. We can't wait to see your success stories in real estate investing. Till next time, aim high. We'll see you soon.